Today we'll be discussing 3 ways real estate is used to avoid taxes legally. Let's begin. First things first is I love talking real estate. As a real estate tax strategist, I have decided to dedicate my life to helping other real estate investors reduce their taxes legally. So when I'm given the opportunity to talk about how real estate investors can reduce their taxes, I get excited about it. I personally feel like real estate will be the way in which I retire tax-free, and I personally feel like many of you who are watching this video understand that too. So I'm excited to share a little bit of these tips with you. We will start off with tip number 1. Real estate investors leverage depreciation to avoid taxes legally. First thing you need to know is that depreciation is the king of all deductions. There are a lot of deductions that you can take, but depreciation is a non-cash deduction. When you're buying an asset, whether you make a down payment for the property or you decide to buy a property in cash, you're given the entire building's purchase price, the building's amount, as a write-off. This write-off is called depreciation, and it's taken over the course of 27.5 years for residential real estate and 39 years for commercial real estate. One of the many benefits of depreciation is that depreciation can offset the taxable income from the rental property that you earn income from, but it can also have the ability to offset other income. If you happen to have other passive investments, whether in the stock market or real estate, you can also offset the income from depreciation. Many professional investors have the ability to leverage this depreciation to offset other earned or ordinary income they may receive as a W-2 employee. Leveraging the tax codes allows for these investors to reduce their taxable income and possibly even become tax-free. Reason number 2, real estate has the ability to provide you with appreciation. When you are repairing your property, you get to take write-offs for the repairs. Most of those repairs that you're doing are expenses. They get to be written off in the exact same year. Anytime you are improving the property, those improvements have to be amortized or depreciated over time, typically 5 or 7 years. However, anytime you're making improvements to your property and adding value to your property, your building has the ability to go up in value. And when your building has the ability to go up in value, that is called appreciation. One of the many benefits of appreciation is that you get to leverage cash out refinances where you're pulling out tax-free money from your property that you can utilize to either repair, use for another investment, or just use to live off of. You also have the ability to do a HELOC, a home equity line of credit, where you're pulling out a line of credit against your property with an interest rate that you can also use that money to go buy another investment property. So a real estate investor gets to utilize funds to repair their own asset, which increases the rental income of the asset, and it allows for them to have cash out money that's tax-free that they can use to go buy additional investment properties. Who wouldn't love that? And number 3, real estate investors are able to leverage their personal expenses to take business deductions. Most real estate investors I work with are managing their own properties. If you're managing your own property, instead of hiring a property manager, you have the ability to hire yourself. Not to mention, if you happen to have children or if you happen to have certain expenses associated with your management company, such as your vehicle or your home office setup, you are able to leverage some of these everyday expenses that most of us personal taxpayers would have to pay as business deductions. One of the many reasons why real estate investors love real estate is because they can get their family involved. Who wouldn't want to have a legacy where you are building real estate that you can pass on to your children, but your children get to learn it while they're young? Investing is one of the most beautiful things that we have to grow our wealth. And if you can get your children started early, why not do so? Real estate strategies are provided in excess at my firm. However, certain strategies work for certain investors and certain strategies do not work for other investors. So it's important that you connect with your CPA or your tax strategist to figure out the right strategies for you. If you've liked this video, I would love for you to like, comment, or subscribe to my channel so I can provide you with more videos like this. I look forward to helping you on your real estate journey, and I look forward to seeing you at the top. Talk to you soon.